Good morning, everybody. It's Wednesday, March 13th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at May corn down 3 cents at 438 3/4. May soybeans are down 9 1/4 at 1186 3/4, and May Chicago wheat was down 1.5 pennies at 546. No export sales announcements or cancellations here this morning. Pretty quiet in the news section, if you will. Strong close yesterday. We were talking about it before the show. We've had a fairly nice bounce off those end of February lows. Kick it off to you, Jace. Maybe just a few market comments. I know we closed above some moving averages yesterday, and we'll kick it around the room.
Yeah, sure, Dan. Right. Since that first notice day low we put in, we've bounced back up and been slowly grinding higher. Yesterday we had a strong close above the 50-day in new crop beans. I'm just looking at some charts here. November beans closed above the 50-day. Comes in right around 1175. So we got up close to 1180. Same for May corn below it, D's corn right, kind of approaching it. So yeah, not a lot of comments on that, right? We've talked a lot about just the, kind of feels like the boot maybe is off the neck of at least of the corn and bean market, with funds being really short and forced selling from the farmers. And so just that relief has helped us rally. Just that time of year too, right? Like if you're a hedge fund and you've been really short corn, really short beans, and it's worked out tremendously, right? So you have a lot of money on those trades, and it just stopped going down, right? And we're getting into a huge report at the end of the month. We're getting into, getting into planting season, all those things. Just, it makes sense that funds start to lighten up and just a lot less pressure, natural pressure on that market. So yeah.
Yeah, Jace, well, I didn't look at a chart, but May beans are what, 65 cents or 60 cents off the lows recently?
Yeah, almost 70.
Yeah.
Almost 70.
Yeah.
Yeah, corn 35 cents off the low. So
yeah.
I mean, if you hesitated and were really hesitant not to price any corn or beans, you should probably be looking at that, right? You've probably, volatility factors probably picked up a little bit in some of these where you might be able to get, some sort of option strategy or, some kind of contract at the elevator to at least box yourself into some price, a pricing tool that you can live with. So
yeah,
that's good.
Well, like, to put it in perspective, we're back to a month ago lows, so like we have had a nice bounce. It's not too spiffy though. I mean, we're going against the 50-day moving averages. Like new crop beans closed above them for the first time in a long time. They kind of tested them overnight. They kind of went right to the 50-day. Crude oil is 10% off the low. So a lot of things are kind of bouncing. I'm curious if this inflation data, it seems like this inflation's stickier than people thought. And we're kind of hearing that, like, just, out in the field too, as far as like construction workers, people that we know that, are in different industries where the cost of raw materials, the cost of goods are just back up to where they were, call it, right post-pandemic.
Yeah.
It's going to be interesting to see how that affects our markets. And, if it sounds like, everyone's kind of trading the interest rates are going to come down, and I'm not so sure that's going to happen. I don't think there's enough data to really say that we should cut rates a whole bunch of times.
No, and it feels like they're, from the last indicators that they're out to midsummer now. It started, the early talk was, this spring, and they just keep punting because the data suggests that it's not cooling. We're seeing an uptick actually, as we've gone forward. So
right. Yeah, I don't know what that means. I don't know what that means for everybody except for, obviously high cost of borrowing money.
Yeah.
And it doesn't seem like those are going back down anytime soon as far as, operating loans or, buying land or, anything like that. Any kind of loan, it doesn't seem like we may not see those levels for a long time, unfortunately.
I think it'll be interesting heading into elections where the Fed is always emphatic that they don't make decisions based on politics. But it would probably be a victory lap if they were able to lower them, which probably, like I think Dan hit it on the head, the data suggests it probably shouldn't be done. So,
Right.
Yeah, and you bring that up, Ben. I mean, yesterday, I'm sure people wake up this morning, but it looks like you got a Biden-Trump rematch as it sits right now, which who knows what that means for the next 5 months,
Yeah, we've talked about this internally, that maybe some of the pressure that we've seen in soybeans, people that are really worried about the possibility of a trade war, and we that may be, and that could be a significant risk, but I think that we have a long way to go before that becomes a true risk. And we have South American weather, we have U.S. weather, and I think historically, when people get in front of these longer term type of headline trades, bean oil, for example, with expanded crush, eventually there's a reckoning before it actually kind of works the way it does. So timing and price action don't always match up to people's narrative, and that can be one of the most frustrating trading experience you can have. You can be right but be wrong.
Yeah, and Ben, just to add to that on the trade war, let's not forget Biden hasn't repealed any of those tariffs. So we act like it's the same policies are in place with regarding China as Trump, except for accountability, as far as meeting those numbers. But the tariffs, I have friends in different industries that have to import certain goods from China, and all those none of those tariffs have been lifted since Biden's been president. So I think that might be a little overblown, and kind of, looking back at what happened before. I personally don't see a huge risk as far as a trade war. I mean, like I said, those things are in place. If anything, maybe it might be bullish, if Trump were to be there, because he might, make them actually be accountable for what they agreed to. So I guess I think that's kind of there's been a lot of talk about it, and there's probably is some of that just uncertainty in there, to your point, Ben. But, trying to trade how things acted in 16. Actually, the funny thing is when the trade war started, we thought it was super bearish. First thing they did was rally beans $1. Ran everybody in.
Yep.
Made no sense at all. Well, I think it went to contract highs just about, and then it broke, $2 or $3.
Well, and I think that speaks volumes to having a margin-based approach. There's at least one guy in here who lost a lot of money when Russia had their wheat embargo back in 2010, because the last time they did that, when we try to make markets correlate to previous types of events and price action, in the early 70s, wheat was limit up for 8 days in a row. And when that happened, we were limit up 40 overnight and down limit the next day. So I think we also have more sophisticated markets, more real-time pricing. And that's why we see those types of maybe, a lot of times we trade these things ahead of time, and that would speak volumes to that dollar rally in beans in the trade war. So
yeah, the same thing happened with that the nuclear incident in Japan.
Yeah, limit down.
Right? Limit down, and before it would have been limit up. So it's all about.
Chernobyl was limit up a couple of days, 2 or 3 days. News moving really, really slow. And Fukushima, we were limit down, risk off, and within a few days we were right back to where we were trading previously.
Yeah.
Don't age yourself too much here, Ben. We don't need,
Hey, you know what?
Yeah.
It's
back in Nam. This is
it is. I think it does it. Sometimes we try to rationalize price movement, and most of the time it can get very irrational. And risk off is an exercise that is executed by those who have risk. So knowing on any one day, you'll never know who that particular person is that gets punch happy. But in those types of events, whether it be election, trade war, nuclear embargoes, whatever it is, we see a quick liquidity dispersal in markets because of the uncertainty. And I think that is just a reminder that we can't always connect the dots and think that we're going to outthink this thing.
Ben, what year was it when wheat hit a $2.50 or $2.40 range when they were blowing? I think it was
February 2008 was the.
Was it 2008? Yeah, it was limit up, limit down, and then
multiple times throughout the course of the day it swung $1.20.
Yeah, yeah, that was a wild.
Yeah, it's a good quote there, Jesse Livermore, right? So
Yep.
Markets can remain irrational longer than you can remain solvent. And that's
absolutely.
Good morning to our friend Nick out in the eastern Corn Belt there. Justin, you made a good point. So you talk about accountability on China's side, with the potential Trump administration. So just for some folks that maybe aren't following as closely, would you say that they've fallen short of their commitments to the deals?
I mean, obviously, they didn't hit those commitments. I think they're always, unfortunately they're playing chess. We're playing checkers, right? With politics, we're focused on some pretty silly things here, and we definitely have some issues politically with what we're focused on, and China's, I think, they're always kind of playing who the next person in power is going to be. They're much more strategic, unfortunately, longer term thinking. So, yeah, I think when Trump kind of put those targets in, they agreed to it, and with the idea that if they could just drag their feet long enough, the winds would change and people would focus on something else. So, I don't, if Trump's if he gets in, obviously, if his biggest thing is going to be, the 10 million immigrants and focusing on that, or if it's China, who knows?
Yeah. It's going to be a laundry list that he's going to go after. It appears he's making no qualms about it.
Well, it's just going to, who knows? I mean, it could be anything at this point. So it's going to be a really interesting year. Interesting is one way to say it, but it's going to be exhausting, probably 2024 as far as, politically concerned.
We almost feel that way. We just got through the primary.
I know. Yeah.
It's crazy.
It's great and horrible at the same time. So,
yeah. Well, it's unbelievable. Just even this morning, after having everything, go through the formalities of it, and it's the first thing is the Trump trade, right? What's the Trump trade? And everybody's gonna be looking for how they position themselves about what he says for the next 5 or 6 months. It's like, how do you know?
Yeah.
But no, good stuff, guys. Rye, what do you got for me on Livestock? Anything shaking out?
Well, it's still pretty quiet here on the cattle side. It's just been kind of locked in this range for the past few weeks now. It's there's just kind of caught. It feels like so the sideways chop. I mean, we're seeing beef still gravitate higher. That's pretty normal seasonally at this time of year, and should pretty much remain consistent. We start getting into the summer, so beef was up another 171. There really hasn't been any cash trade yet to speak of. The asking price is going to be around 187 in the South, probably pay up to 188. I think that's what the market's already anticipating. So already priced in a lot of that sentiment to the board. And it just seems like there, at least the way it's trading right now, it feels like there's very limited downside risk. And I always think that that's a dangerous place to be, just because we all know what the supply situation kind of looks like and how tight everything is. On the other hand, there's things that can change the dynamics of these markets really quickly when you get locked into these ranges and get complacent. So, I still think it's really paramount to have enough coverage or protection from a price standpoint that you can, as we start kind of moving into the summer, just because you can certainly see some dips. I mean, cash market can stay pretty strong here. Beef can stay strong, but the futures market are still trading well ahead of all of that stuff. So I think it just makes sense to look out to forward margins, look in the second half of the year where there's the most, I would say, concern or uncertainty, and just kind of make your decisions based on that. But other than that, I mean, managed money is still long this market. It looked like open interest was up in the live side of things, another 566 contracts yesterday. So that commitment is still going up with these higher closes. It seems like the management wants to stay here. The outside specs want to stay here. So like I said, it's hard to see any real downside at this point, which is always just a little bit unnerving from a risk management standpoint. So I would just pay close attention, and hopefully we see some higher prices cash wise this week.
Oh, very good. Appreciate it, buddy. Thanks for the insight. Just came into the open here. We got May corn down a penny and a quarter at 440.5. May soybeans are down 7.1189, and May Chicago wheat is down 3 1/4 at 544 1/4. Tomorrow morning we will have export sales out at 7:30, so we'll visit about that in the war room. As always, if you've got any questions, want to go through crop insurance, you got a couple more days to make some selections there. Don't hesitate to reach out, give us a call, reach us at info@agyield.com. I'll more than happy to be a second set of eyes there for you. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Standard Time. Appreciate everybody's thoughts and comments this morning. We look forward to talking to everybody tomorrow morning. Have a great day.
All right. Thanks, Dan.
Thanks.